You were involved in the conference today that Investec managed, and really along the theme of the global financial crisis, and in the spite of that, South Africa being well regulated, well capitalised, we came through it rather well. And the question is, with circumstances still remaining fairly difficult, can this continue? So just your broad brush thoughts to begin with.
Well, I've just come back from Japan. I was at the IMF, and I think I'll just echo what Wayne said. In fact, I met the new CEO of Citibank. I didn't know he was going to be the CEO. When I met him, I thought he was just another fellow from Citibank. That
if you'd known, you'd have exchanged cards.
I would have been. I thought I was fairly polite, but I think that the world is moving maybe to a different place. I think it's still going to be tough, as Wayne said, but certainly for the first time in the last 5 years, since 2007, there's been a much calmer demeanour amongst the global banks, in particular European banks. And it just implied to me that for the first time they were working through the problems and had got more, almost to the other side, as opposed to being in the midst of the heat. The deleveraging is 3/4 done. The American economy is moving in the right direction. The banks you saw, JP Morgan, Wells Fargo, with pretty good results. The American housing market is sort of lifting its head, and I think that's a very good sign. I think, yes, there is a slowdown in China, but still growing at a big number, like 7%. And Europe probably will not grow for a number of years, but I think the point that was made was the adjustment process is taking place. Europe is getting more competitive. They have deflated their cost structures in peripheral Europe and have made significant progress. So one feels that although it's still a bumpy ride, the world is in a much better place.
You straddle global and local markets.
Yes.
What does all of this mean for South African banks, so your South African leg?
Well, I think South African banks have fared pretty well over the last 5 years. Obviously, we all had a dip in earnings, but you saw some of the banks start showing quite a strong rise in earnings, and the market is reflecting that in some of their share prices. So I think that we were well capitalized, we were lowly leveraged, and we were pretty liquid. And I think the world is getting quite liquid actually right now. So you are seeing quite a big shift in where the world is compared to where it was. But economic activity is still muted.
Do you think, Stephen, that globally managements of banks have certainty from a regulatory standpoint as to how much capital they need to keep so they can put the rest into the market and account for it the right way?
I think what you've started to see is that the regulators have now thought, okay, they're overcooking the goose. We saw in the UK the other day that the UK regulator said for certain types of lending, no, you won't have to hold any capital if you lend to specific segments of the market, which is small business in particular, which they believe are not getting any money. So I do think that the regulators are woken up, is that you bring in very harsh capital requirements towards the back end of a boom, not when you're in a crisis. And so there is some kind of relaxation. And there's a talk about delaying Basel III in Europe by a year. We heard from our regulator that they're not delaying anything at this point in time, so we're getting Basel III 1st of January, but it is phased in over quite a long period of time.
So is that appropriate if you say, even though they're phasing in, they're going right ahead, is it appropriate for local market conditions?
Yeah, I think capital is not an issue in South Africa. I think liquidity has been more an issue under Basel III because the structure of the South African system, cash is very short. We don't have a big pool of retail deposits. A lot of our money is wholesale. It goes into the contractual savings vehicles and then back to the system in wholesale form. Whereas if you look at Europe and other parts, they've got big pools of individual savings because they developed societies.
Yes.
Stephen, two reasonably specific questions. One, South Africa. What about the unsecured lending here? Is this actually a problem? I mean, Investec might not have that much exposure to it, but is this a problem? And secondly, in the UK, what's the future for the UK economy, the property market? Where is it going, or are they just mired in debt for a sustained time period?
Yeah, I don't think the UK property market is in that much trouble. I think that housing has sort of recovered. I think there's certain areas in the UK where housing is particularly strong. Certainly prime London is very, very strong, as you see people from different countries actually moving to the UK or buying property in the UK. I think that commercial property there, if there's a strong tenant, are trading at yields that we haven't seen in our history. If there's weak tenants, those things are trading at high yields. But I think the problem is that obviously the UK government owe too much money, and they need to bring down this debt, and therefore they've got an austerity program. And when you add that to the fact that you've got a big slowdown in Europe, it's causing the UK economy actually to maybe trip into a mild recession. But I think that's really what they've got to deal with, to try and get their government's debt into order. The banks are sound. The banks have been fixed. Yep. So those economies where the banks have been fixed, the system is no longer sitting with cliff risk, but it may still limp along because there's just no global growth.
And on the unsecured lending, are you sorry that you don't have an exposure there? Was it just
your target market? We have R1 billion of unsecured lending to our core target client base, which are professionals and high-income individuals. So we're not in that market at all. We've never been in that market. I don't think it's a problem for the banks, because I think it's 4 or 5% of their loans in the unsecured space. I think there very clearly has been poor practice, and I think we heard the other day that the Department of Trade and Industry went into Marikana and found 19 of the 20 or 21 unsecured lenders breaching the National Credit Act. So I think there is abuse, and I think it's part of the problems of the strikes is the fact that take-home pay is much lower than it ordinarily would be because of payroll deductions. So I think it's not a big issue, it's not a systemic issue, but it is a problem that needs to be dealt with.
Yes.
Stephen, I want to ask you a question that might take you back 20, 30 years. You are a gentleman that has started a company from scratch. You've developed it into a global brand. Are you sad at the rate at which South Africa is not creating companies such as yours or in other industries, and how entrepreneurs have to scratch around to get capital, to get business assistance, and to be the next Investec?
I think that entrepreneurs can get money, in my opinion. There's lots of private investors, there's private equity firms, there are things that didn't exist 30 years ago. So there is money around. It's just a question of what's the idea and how you're going to bring it to fruition. We're still seeing guys start businesses. I mean, how long ago did Adrian Gore start Discovery? Yes, he got backing from First Rand, but probably, I don't know, I can't remember, it was 15 or 20 years ago, and look at the business he's created. I don't think there are enough Brian Joffe's. I mean, there are some that are coming to the fore who've started businesses and built them up, but there are a lot of youngsters doing pretty well and starting things, but perhaps not enough, and certainly not enough amongst our black community at this point in time.
And certainly not enough to create jobs and suck up the...
I think the job creation issue is a different issue. I think there's lack of policy clarity. I think that the government need to make it clear that nationalisation is not on the agenda and that this is a business-friendly country. And then the private sector will invest more. The private sector holds back because they don't get policy clarity. And people would rather go invest in Africa than come to South Africa because there's lack of policy clarity. And this whole issue with the mines and the unions, and a story was related to me today that some of the miners on strike have made so much money from their empowerment deals that they've made 500,000 or 600,000 rand each, and they're going on strike asking for a few extra % wages because they think they can. I think we really need to work together as business, labour and government to build our society and to build our country. Everyone running down different roads in different directions does not help us. It creates a confidence crisis, and then people don't invest. Locals don't invest and foreigners don't invest. And that's really our challenge.
Stephen, in closing, you had this conference today, and I suspect this was the tone and the theme of the conversation that you had, to have an area where big private businesses could have this conversation about developing the private sector, making sure it is an employer and a robust environment.
Yeah, no, I think these were fairly large private companies, but we believe that there's a lot of opportunity in South Africa. There's a lot of opportunity for South Africans in Africa, and that there is the money available to support them in their expansion programs. Obviously, you need the right policy framework and you need confidence, because people will not invest when there's a lack of confidence.